Good morning, everybody. I will try not to put everyone to sleep with an insurance information here, but typically, if you're going to fall asleep, this would be a really good time during the day to do so. We're going to be talking about freight fraud and insurance, specifically around 3PLs and shippers and how it affects what everyone is going to pay over the coming years. We're in a pretty historic time where a couple years ago, we looked at nuclear verdicts was the major industry issue that we were all attacking together that affected everyone, was in the back of our minds. And while that's still prevalent, we're now looking at freight fraud as the biggest issue facing the industry because it's so much more granular. It affects brokers that are both new ventures as well established, and some of the largest in the country are getting hit daily with freight fraud claims. What we have found is that many of the fraudsters, as demonstrated by Overhaul this morning, are very sophisticated in what they do and the technologies they use and their utilization of AI to what I would say is make a difference for their families. As well as some of us are brokering freight or selling insurance or utilizing services to stop these things, these fraudsters are actually building lives and living their American dream by going hard at stealing freight. And they're doing it in more and more sophisticated ways. They're innovating, they're industry changers and movers and shakers. So they're paying a lot of attention to their business. We're also paying attention to our businesses, of course, but as we and our technology partners continue to evolve, they continue to evolve. And oftentimes we find that sometimes the fraudsters are one step ahead of us. Even our most trusted technology partners that we're utilizing help get ahead of theft and fraud. 4 years ago, a new venture freight broker could purchase an insurance package for around $7,000. It would have cargo with the theft component included, general liability, errors and omissions, auto liability, the full package for $7,000. Nowadays, for the same size freight broker, a new venture just starting their business, stars in their eyes, excited to hit the trail and start brokering, $7,500 to $10,000 will be the endorsement price alone to cover theft if they want that optional coverage. What used to be inherent in an insurance form, which would be fraud and theft coverage, is now completely carved out in an attempt for insurance companies to protect themselves. So there's always going to be an additional cost. That's the way that the market is evolving. If you're going to fall asleep, now is a really good time. So I'm going to touch on 4 types of cargo insurance really quickly. The first is cargo legal liability. For defense, that doesn't actually pay cargo claims. It pays to defend the broker if you get sued pertaining to a cargo matter. Then there's contingent cargo, the most common. It is designed to kick into gear when the motor carrier's insurance has done its song and dance, and now the broker's insurance can move to make your shipper whole for their lost or stolen goods. Primary cargo or cargo legal liability is designed to really respond to contractual risk. So if you are a broker who is heavily in contract freight and has many contracts with your shipper customers, a majority of contracts, cargo legal liability or primary cargo is going to be a great move for you because it's much more responsive than a contingent form. It's much broader, meaning there's fewer exclusions, and it's much quicker. So it can actually pay out your shippers for their lost or stolen goods, oftentimes before the motor carrier you trusted that load with is able to get a first response from their insurance provider. The final kind is shipper's interest. This is more of we're not going to ask any questions about the motor carrier's insurance. We just you're going to pay us a premium for it, and we're going to pay to make your shipper whole. It is designed to be more expensive, more inclusive of every kind of theft, every kind of loss situation, including theft, and therefore there's a meaningful price tag associated. That's typically usage-based, so it's purchased in a portal on a monthly reporter, and freight brokers, motor carriers, distributors, shippers, they can all access this. It's available at every piece of the supply chain. I want to touch on how insurance is actually changing based on the fraud and theft that is occurring. As you can imagine, all of the markets that provide coverage for theft are getting rocked right now. Whether it was the cheapest, worst contingent cargo form that barely responds to anything, even that form is incurring claims. And then the broadest, most expensive, top-of-the-line cargo form, primary cargo, shipper's interest, that are designed specifically to be broad, to have a really great response for your shipper customers, those are getting rocked the hardest because they're intentionally broad. They're supposed to absorb claims. They're supposed to make your shippers whole. And so what that means is that when we have an industry where all of the broker market correlation is that we're going to have a pricing increase across the board. Insurance companies aren't going to care necessarily that you've operated loss-free insurance, unfortunately. So I wish I had a message of hope like I'd like to deliver. However, we need to be a little bit realistic here, and that insurance markets are a necessary evil in the freight broker space. And as much as owners of businesses do not want to talk about insurance, we need these programs to both make our shippers whole and defend our business if something catastrophic happens to us. What we are seeing specifically within an insurance package on the cargo line of coverage is theft is being excluded unless purchased back, as I mentioned, but they're also adding new definitions to it within insurance policies. Standard theft, which is where we hire ABC Trucking and they steal a load. We know who it is. We can go after that load. That's standard theft. Strategic theft is a little harder to define and is much broader in its nature, but that just means that we don't know who took the freight. We hired ABC Trucking. Someone else showed up. Someone impersonated them and they've stolen our goods. We don't know where it is. We don't know how to get in contact with them. There's many, many ways that this happens. It's just discussed in the cyber insurance panel here. And oftentimes what you will see your insurance renewals and what you should discuss with your agent is if both of these coverages are included or if one or the other is. Some insurance markets don't want to provide both standard theft coverage and strategic theft coverage. They'll offer you one or the other, and they might not mention it as well. So as you're in the insurance buying process, it's really crucial this year to ask if both types of theft are covered. Some markets will only quote one or the other. And another way that they're defending themselves is the use of aggregate limits of insurance, meaning they're going to put a total limit for theft on for the year. Some of you are probably seeing this in your current renewals as of 2025, maybe even late last year, where you might purchase a $500,000 or $250,000 cargo limit of insurance. However, theft is going to be given at maybe $100,000 aggregate for the year. And that just means that you only have $100,000 in cargo payout that can be given over the course of the year. So while you purchased a higher limit of insurance, your theft coverage is going to be severely limited. One $100,000 theft claim would eliminate that immediately, and you would be self-insuring theft for the remainder of the year. It's a meaningful consideration, and also that there's usually a sublimit involved, meaning even though you purchase $250,000 in cargo insurance and you expect that limit, you might only have theft coverage up to $100,000. Sometimes I see it sublimated to $50,000 as well. So it's important to check on that. How is your insurance form going to respond? Because brokers now more than ever are going to have to think about self-insuring at least a component of theft coverage. How much more expensive is it going to be for loss impaired accounts when a broker, maybe for no fault of their own, sustains a slew of losses? It's going to make the insurance buying process much more challenging for them. They might not be able to obtain theft coverage in the first place. The unfortunate thing is that we don't have a ton of competition in the freight broker insurance space. While in motor carrier world, there are dozens and dozens and dozens of insurance companies that will quote coverage for motor carriers. In freight broker world, there's less than 10 insurance markets that really are focused on freight broker insurance. And of those that I would trust my own 3PL with if I had one, I would really only purchase insurance from 3 or 4 markets on the cargo front. So you don't have a lot of options is what I'm getting at, which is unfortunate. However, there are new entrants into the industry that are starting insurance markets. Something that we've seen and should be aware of when new insurance markets come, the way that they get in the door oftentimes is called buying the business. And that means they underprice their insurance so that they can build a book of business quickly so that more freight brokers, more insureds will come and join their form. However, it is very easy to get underwater, meaning they incur more losses than they take in premium when they're buying the business or pricing insurance at a very, very competitive standpoint. So it's something we need to be aware of because in motor truck cargo, what we often see is a new entrant will come to the marketplace, offer a really slick and cheap cargo product. However, they'll sink within 2 years and they'll completely exit the marketplace. Even just in the past 3-4 years, we've seen, I can name close to 10 motor carrier insurance markets that have exited the marketplace. Not only that, but strategic theft and fraud has also affected the way that you purchase surety bonds. Surprisingly, what used to be an easy process that would be $900 if you had great credit to buy a surety bond, which is the only thing you need legally from an insurance standpoint to operate your brokerage. Now, what we're often seeing is that there's been consolidation in the bond markets where there used to be, dozens of surety bond providers for 3PLs. I've seen 8, including 6 of the largest surety bond providers exit the space over the last year because of all the fraudulent claims against broker bonds, against freight broker bonds. So when we are filing freight guards on motor carriers, sometimes that's with good intention for a fraudster. Sometimes it's against a good carrier who got mixed up in something they shouldn't have been or they were impersonated. they retaliate oftentimes by filing back against the freight broker bond. And so this is another cost that is needed to be taken into account for freight brokers, because what used to be a $900 surety bond oftentimes is now $2,500, $5,000. I've seen some bonds $10,000 to $15,000 at this point for freight brokers. So it's affecting us in more than just the annual cargo pricing. One final way that it's affecting us is with usage-based insurance. Oftentimes when a freight broker might be lost and impaired and can't obtain coverage on theft with terms that they really find agreeable, so having unaggregated or unsublimated theft for the year, a way that they protect themselves is going to a shipper's interest portal or reporter and purchasing point-of-sale insurance for their key shipper clients. And sometimes they pass on the costs, sometimes not so much. They eat the costs. And what we're seeing in the shipper's interest market as well, which I would consider pretty much the broadest coverage a freight broker can purchase to protect their key shippers' goods, is massive pricing increases. It's sometimes doubling in pricing. Sometimes it's commodity specific. Sometimes you can make it shipper specific. But the pricing continues to escalate because losses continue to escalate. Again, I wish I had a message of hope, but to be frank, about this time last year, I'd see 2, maybe 3 theft claims a week. Currently, in my personal book of business, I'm seeing about 7 to 10 theft claims a week, both from new venture brokers and then clients that are, a couple billion in size. So no one is insulated. In our insurance markets are saying, unfortunately, that some are seeing 50% claims, meaning 50% of all the freight brokers that they insure in the industry have incurred at least one theft claim. I hate to say the numbers are not moving in the right direction yet. However, from an underwriting perspective, when freight brokers utilize Highway, CarrierSure, RMIS, you have 2 identical brokers, and one is using a tech stack like this together in conjunction with their great carrier vetting. And then a similar company is just going to their underwriter at renewal and saying, we do a great job carrier vetting. Who do you think is going to get a lower insurance price? Insurance markets take these things, your technology partners, into heavy consideration nowadays. So demonstrating that you've invested in technologies that help mitigate their risk and your own risk makes a very big difference this year for freight brokers in the insurance buying process. Lastly, many brokers are fighting the massive increases in premium by elevating their deductibles. This is a tool that you can use with your insurance profiles to offset your costs. So it means more skin in the game for freight brokers, for yourselves. And what that typically looks like is, instead of having a standard $5,000 or $10,000 deductible on theft, ask your insurance broker if you can elevate your deductible, if you have the appetite for it, to $15,000, $25,000, $50,000 on theft. This means more skin in the game for freight brokers. However, it's going to severely decrease the cost of your theft coverage. It might even allow you to overcome what would have been a sublimated and aggregated theft coverage for the year, and allow you to have full limits of theft by buying in with your insurance company. Thank y'all for listening today. Again, I wish I had more of a message of hope, but hang in there, y'all.
Awesome insight.